everybody, welcome back. It's been a couple days since I posted a video. I just had my birthday over the weekend, so um, anyway, just had a couple days where I did not post. So overall, we had a good Friday as far as the market came back. I think the market came back like 3% or whatever. Ours came back about 12 to 13%. And then today, as I was going into it, I was looking at the Dow futures, and they kept going negative and negative. And finally I went to bed and they were like negative 800. It was crazy. And I'm like, holy cow, because those usually aren't the high number. Like if it's negative 500, it's going to be negative 600 or 700. So it's like negative 800. I'm thinking, okay, this is going to be a crazy day. And then the market opened up and it dropped immediately. And the whole day basically went, this was the drop you don't see, right? It kind of went right to about right here, dropped, and then the market came back, was positive for a little bit. And this is just the Dow numbers, not this chart. And then it kind of faded down, and it was up like like 0.5%. So that being said, we still beat the market, although granted it's only 0.18%. But I think it was some rattling by the Fed chair, because he was saying that it was going to be a long recovery, and anything he says gets totally blown out of proportion. So the long and short of it is it started down. And one of the things that I saw when I saw it down 800, I'm like, all right, we're going to take some preliminary protections just to make sure we can limit our downside a little bit. And so I took some stocks that we had, and that we had some modest gains on that didn't have a big number gain on it. And at the same time, maybe weren't at the top of my list for my favorite stocks, and we did a sell order on them. So just to free up some cash and to give us an opportunity, if the market did go crazy down, that we would have some money to play with at discount prices, which is, the whole idea is we want to keep our cost basis as low as possible. So with that being said, I sold, here we'll touch base on those a little bit. I sold Red Rock, let's see, Menlo Therapeutics, Viking Therapeutics. Again, the biotech companies, those were kind of on my list because you just never know when they're going to pop. And they aren't really part of my original post-COVID or pandemic investing strategy. Two Harbors, which is one of my favorite REITs, but that one dropped a little bit recently and there wasn't much to lose. And I think those were the Therapeutics MD was another one, and I think that was it. So with that being said, the market was totally flat. I mean, completely flat. It starts down 800 and it ends flat. I mean, that's just the weirdest day. We won't ever see a day like that again, I don't think. But then again, over the last 3 months, I can't really say that for sure, but it's just a weird day. If it starts down, it usually ends down. If it starts up, it usually ends up. But to what degree, it's, that could change. But to start way down and to break even was such a weird day. I mean, I just don't think I've ever seen a day like that in general. Forget about, during the pandemic investing thing. So with that being said, I noticed a couple things here. Basically, big macro trends that I've noticed is, people are questioning, is there going to be a second wave? Because a number of cases are going up. But the problem is twofold. Number one, there's two reasons. The main reason the number of cases going up, well, maybe two. One is they're testing more. So it's like, if nobody's testing, then the number of cases are going to be low. Duh, right? So, but if the testing number is high, then the number of cases are going to go high. Plus you had, hundreds of thousands of people in the streets that completely blew off every social distancing recommendation or mandate, or it depends where you're living, type of thing out there. And yeah, cases are going to go up. But in the beginning, you have to remember, cases were not the barometer. Originally they said everybody's going to get it. There's nothing you could do about it. So really, cases were never the thing. The two stats that everybody looked at were hospitalizations and deaths. And that's where they talked about flattening the curve, because it was about, okay, we need to flatten the curve so that we keep the hospitalizations underneath each individual area's maximum bed capacity. I mean, that was really the whole point. So when they say, cases go up, who cares? If you have a case and you're testing positive and you have no symptoms, then that case doesn't mean anything. And so you get a whole bunch of fear mongering. And if you remember, Warren Buffett, one of his favorite things, he said, be greedy when people are fearful, and fearful when people are greedy. So with that being said, we want to look at some trends and look at some opportunities to take advantage of somebody's stupidity when they're selling stocks. So number one, we'll take a look at the macro here. So we'll just go down. It looks like half red, half green, half red, half green, maybe a little more green than red, but not by much until you get into some of the watch lists down here. So, but with that being said, let's take a look at Bitcoin. That was about 3%, so that's relatively flat. And this is wavered from like 9,100 to 9,900 or 9,800. So this one's kind of in its own little little circle right now. All right. So with that being said, take a look at some macros. We take a look at some of the bigger movers just to get an idea. I'm not going to look at all the bigger movers. There really aren't many, but most of them fall into a particular pattern. So we're going to start with PVAC, which is Penn, Virginia. And if you're new to the video, they basically do crude oil production. They dig it out of the ground, natural gas liquids, and natural gas. They do shale in South Texas. So that is called fracking. This is a fracking company. And so we got to go back to when gas or oil was negative $40. They had so much oil because there was no demand. Everything was shut down. And oil deliveries are like 4 to 5 months ahead of time. So if you want something in June, you have to order it in January. Well, the pandemic put a big kibosh on that. And so all this oil arrived that they forgot about or just had nothing, I tend to think they forgot about it. But even if they didn't forget about it, it was very poorly planned. They had nowhere to put it. And so they literally had to pay people to take the oil off their hands. And so as such, you have all this oil sitting in barrels and containers and ships and nowhere to go with it. But over the last probably month or two, maybe a month and a half, we've started to see the storage supplies go down. You see the stock and activity for people who are doing in oil transportation go up. And so you can tell that demand is going up. And so this is an example of one. This is a downstream one. So this one is probably less likely to go up unless people are convinced that demand is going to go up pretty quickly. So because it's a little bit of a lagging indicator. So overall today, this one went up. It says 3%. I thought higher. Let's take a look here. No, it says 7%. I'm not really sure what's up with that. So, it's overall. So yeah, so about up 7%. Most of it's after hours, which is that little bump here, which is nice because we're going to talk about after hours once we're done. After that, the one that I always pair this with because they seem to go up and down in tandem roughly is UCO. This is our ETF. And this one is the same thing. It went 3-4% during the day, but relatively flat after hours. But basically went up 5% for the day, which is good because this one got beat up last week. Texas Hospitality. This is weird. This one went down 13%. And what these people do is it says catering and hospitality services for all these different oil basin. So basically West Texas oil basin. So it's the people working there. So I think the concern is if there's a second wave and all of a sudden they're going to start shutting down, governments and economies again, you're going to start to see this company take a hit. And I think that's kind of what you saw there. But I was watching a press conference with the president. And one of the things he said is we're not shutting it down. So, and part of it you have to kind of take with a tongue-in-cheek, or not tongue-in-cheek, but just with you have to take, what's the expression? I don't know. You have to take it with something with salt, a piece of salt or whatever it is. Sometimes English is my second language. And basically just understand that it's the local areas that do that. So with that being said, I looked at this and I'm realizing, okay, this might be an opportunity. So we're going to talk about Texas Hospitality in a little bit. This is the one that I was kind of upset with because I caught this early. I literally caught it the day before it went boom. And I put an order in, a market order, and it didn't get filled. And basically in the last week, it's gone up 80%. But in the last month, it's gone up. I mean, virtually, I had it right here at 212. And it's sitting here almost double. So, so with that being said, yeah, it's basically, it doubled at one point, but I basically caught it here and the order didn't fill. So I'm still kind of bitter about that. And I have it highlighted on my sheet. So I'm always going to look at that. But this one went down 13% as well. So we'll take a look at that one as well. All right, so let's go to our stock sheet. So we'll slide that over. And basically, I had sold a few of them. So let's take a look at that. So I sold Menlo, Therapeutics MD. Let's take a look. What other ones? Viking Therapeutics. Red Rock Resorts, and Two Harbors. And so I really didn't want to sell Viking Therapeutics, but basically it was at a point where it was like, I think it was at like a 15 or 20% gain, and I just wanted to free up some cash just for some opportunities. I'm not going to take gains that are in four figures here, and I'm not going to take gains that are close to, if not over 100% or 200%. That's just not going to happen. I almost thought about IVR, but again, this is over 4,000, and I'm not sure if you can hear that on the mic, but there's a military chopper flying over my house. And I didn't do anything, I swear. So, all right. So with that being said, we are sitting at about 60% overall. Top performer is Crestwood Equity. Right behind that is Braemar Resorts. Or actually, I take it back. Top performer is PVAC, then Braemar, or then Crestwood Equity, and then Braemar Resorts. Redwood and Service, even after last week, are still doing well over 100. GNC's literally pushing 100. I mean, it's like 0.997 or something like that. And then Eldorado Resorts as well. And remember, Vegas opened like a week and a half ago. So, we should probably see something next month about a big boom, which would take every with it. So with that being said, total overall, about everything, including what we sold and reinvested, we're up 92%. Let me go ahead and close this guy down. All right. And let's see. Overall, from what we invested, we're up 89%. And that's after, the big drop down. I mean, like the 2,000 point drop in the Dow. And everybody took a loss. It was just an across the board thing. But we're still up 89%, which is really good. So with that being said, take a look at our upside, and then we'll cover what we bought. So number one, Yuko is pretty much always going to be on top for a long time. XAN, which is a biotech company, went down a little bit. It's still recovering. It's close to getting back where it needs to be in positive territory. IVR, let's see, which, we're still staying with, still doing really well. And we'll talk about Houghton Mifflin, Viad, Two Harbors. We put a limit order in on those. We'll talk about that in a little bit. Azul and Velocity. We have a limit order for Velocity. And then Red Robin, which I forgot to put my little highlighter on. Boop. All right. And from there, so I wanted to basically get coverage on all the ones up top here. So we put limit orders on those. I was considering MFA, but decided to hold off on it because I think we're good for oil for right now. And then AVCT is bumping up. So it's at a point right now where if this drops down to about 3.5, this will change the upside to over 3. So if that goes to 3.5, it's still got a bunch to drop. Then I would consider buying that again. The reason I originally bought it was sitting here at a 4.69% upside. But cutting that in half, I'm not in a rush to buy it yet. I want to see this number go down, this number go up, and for this row to move up. All right. So with this one, I looked at Houghton Mifflin. We added some limit orders today. Houghton Mifflin is pretty much the preliminary, one of the top two at least, textbook publishers in the country. It's them and Pearson. But their numbers and their stock are much better than Pearson. So I decided to put a little bit of a limit order in, put $2,000 in there at 180. So if it drops down to 180, we'll get that bought in. I didn't want the bar to be too low for the buy. I wanted it to be something where we got in, but obviously a good ratio, 3.66 to do that. Viad, I've been considering for a while, and this one's been moving down a little bit, which is good. So we put a limit at 1980. This is a little bit more of a push to get there, but if it does, it'll go from a 3.1 upside, 3.23, so which is good, but it requires a little bit more effort to drop down, probably about 0.8 points. Two Harbors, we're just getting back in, honestly, pretty much around the same price that I had sold it at. So we take a little bit of a gain and just kind of invest what we, kind of what we took for what we sold. So we're just basically reinvesting that. And I took it from 432 shares to 440. And then Red Robin Group, this one was down here, is doing well, but it's kind of pulled back on just fears of it being a slow pullback or maybe low demand for a little bit. So basically I put in a limit order. Let me make sure I did put in a limit order. Yes, I did. 12,100. All right. So if it drops from 12.76 to 12, we'll get it over 3. So that was kind of my benchmark. I wanted it to have to be something over 3. All right, so let's get Red Robin in here. Let me just make sure. Let's make sure it's in the right order. All right, so we'll take this and put it up top here. All right, so with that being said, we have a whole bunch of limit orders in here. Red Rock, we're getting back into. Red Robin, we had a long time ago, but I'm fine getting that back in. I think the ratios look good. Two Harbors, we're getting back in. Viad, we're adding. Viking Therapeutics, Menlo Therapeutics, we're adding to get our biotech back in. And Hufflin Mifflin. Now, the key thing I looked at here is the upside. So we have good upsides. The Viking Therapeutics shows 1 just because it's a biotech. It's not really a COVID lost stock. So that's a little bit misleading. And Red Rock was probably the lowest of them, but I still believe that casino segment is going to blow up. So I definitely want to get in on that. And Menlo, I'll get back into. I like this stock. I want to give it a chance. It has a 100% buy ratio. But if I had to sell anything or cancel an order, this would probably be the one that I'm looking at. So with that being said, take a look at our projections. And I left these zeroed out because I just know we're getting back into the ones that I had sold. So I'm just going to leave those for 0 now just because it's a temporary spot. So with that being said, with the current ones that we have right now, let me just make sure we have. All right, good. Those are in there. We're still pacing 263 for the stocks that we currently own. And with the new limit orders we have in here, we're adding another 39,000. A lower ratio, what we have right now in stocks right now is 6.24. For the ones we have on our limit orders, it's only 269, which is 267, which is fine. We're later in the process, but we're projecting out breaking over 300,000. So with that being said, we'll take a look at tomorrow, although that's pretty funny because it was like super negative yesterday and it ended up totally flat. So, it may or may not mean anything. It's a weird time we're in, and, it's funny. People talk about investing and they look at P ratios and fundamentals and support levels and all the other stuff. And in normal instances, all that totally makes sense. Cash flow, beating quarterly estimates the last time, PE ratios, all these things are very important, except for this time because this is the craziest time and people are buying off of, it's almost like 99 in a sense, like people are buying off what they hope the company is going to become. But the only difference is it was that company before and they're just expecting it to go back. So kind of the fundamentals are out the door for the most part. Especially when you consider like government bailouts, and some companies are going to get them and some companies don't. So things to think about. So looking at the indices right now, it says it's up 77 points, basically 0.31. If we look at CNN, we'll just refresh this out. Make sure that, all right, up 0.4. So basically a little bit broken even. And this was, they were just talking about the Dow swings on 1,000 points in turbulent trading. So with that being said, I kind of have this set up with a whole bunch of limit orders. Some of them are going to come faster than others. Like I think we're going to see Hufflin Mifflin is probably the easiest one to hit. Menlo probably is up there. Viking Therapeutics is going to be a little bit harder to hit. VVI is going to be medium hard to hit. And yeah, the other ones are going to take a rough day. So I put these in here. I'm okay with what I have right here, if nothing else. Basically, if the market goes up, that's great. I'll reevaluate. I'll take the gain by all means. I'm never going to turn that down. But if it goes down, we have an opportunity to get stocks at a discount, and then we'll always reevaluate other stocks as well. And again, one of the things that I like doing, and I did it right before I shot this video, was I'll go in and I'll look at percent gainers. This is why I like Robinhood. It'll give you, 10% gain for Crestwood Equities, the top one, and then GNC went up 8%. But you'll be able to see if there's any big ones on there. But I like to look at negative gainers and see if there's a big one. And right now there's not so far. Texas Hospitality, and scroll down here, and AVCT are really the only two. So thought it was going to be a real impactful day. We're going to make some good leverage moves, but today turned out to be totally flat. So we'll see what tomorrow does, see if there's anything crazy in the news. But overall, all things are pointing up. Make sure you get your investments in. If you don't have a Robinhood account, make sure you do this. There's a link where you can get a free stock inside the video description. And also, if you want to look at, download and look at and use and even cheat and steal this spreadsheet, by all means, you can do that as well. And there's a link in the show notes for that. So I'll talk to you later and see you then.
To get more information on the sales cheat code, go ahead and click on the subscribe button below. Also, down below in the video description, down there, there's a link that takes you to our website that gives you additional content, some additional freebies that we have, and gives you information on some programs that we have that have been proven to help people to make sales easy so that you can make the kind of money you want, live the lifestyle that you've always wanted, and not have to struggle in the process. And what might be the coolest thing of all is you don't have to put much effort into it. It truly is a cheat code that most people don't know about. And it's a cheat code that can change your life today. So click on the link below and let me help you start to experience these results starting right now.